for the very latest. We're joined by Michelle Schneider. She is a chief strategist at marketgauge. Thanks for your time, Michelle. So U.S. stock futures, as we've been tracking, looking little change this morning. And it comes after the S&P 500 logged its third weekly gain in full. What is your current read on investor sentiment, amid the looming tariff negotiation deadline of 1st August, Q2 earnings season as well?
Well, so far, earnings season has been okay, stronger than a lot of people anticipate. Of course, we're hearing forward guidance mixed with tariff warnings and inflation and higher costs. But it has been all about AI, and not just AI. We've seen a lot of big moves this week in space, rocketry, and quantum physics, and all kinds of things that are really more futuristic in terms of where society's going. But that's only one part of the market. What was so interesting about last week is that on Friday, as we ended the U.S. market, we retreated from the highs. We retreated from what we call a July calendar range high, which is the midpoint of the year. So I think this week is going to be extremely important, not only to anticipate growth continuing to carry the ball, but we're going to be watching to make sure it's not some kind of a fake rally like we saw in January, February, when growth led. And then all of a sudden, everything sort of turned down ahead of the tariffs. And we have that August 1st. So that's one thing. The other thing to watch really would be the sectors that are still not catching up, like the consumer sector. That's really been my major focus. Even though with consumer confidence was better, Liz, in the United States, it's still as a group, as a sector, looking at one particular area called XRT, the ETF, is in the middle of the range and not really showing any signs yet that the consumers are really feeling confident as one would hope at this point.
Just to zoom in a little, we've seen a little bit of divergence there among the sectors. So utilities rallying, but energy, healthcare lagging some. How are you interpreting this? And you've noted how energy markets appear to be entering, I suppose, a new phase of complexity, especially with demand from AI centers rising.
Well, yeah, I actually think it's quite interesting that we have the energy sector doing so poorly relative to everything else. Because if the economy is really going to do well, obviously we need the energy sector to participate. We cannot fuel the economy. We cannot fuel AI, data centers, the grid itself, which has been stretched in the United States and globally without having those commodities start to actually pick up. So even though oil has done okay, it still has room to go if it clears $68. Natural gas, which is extraordinarily cheap, many people, especially people in the business, actually in the oil and gas business, are expecting that to go higher. And of course, solar energy, which has not been the favorite child of the current administration, is still doing very well. Even coal, although it's not necessarily performing and nobody really wants it to because of the dirty energy aspect, has not really kept up. So it's interesting to me. I think you really need to watch that sector, because if we're going to continue to see this market rally, or even if not, I think it is so undervalued at this point. We have big eyes on oil, gas. Obviously, uranium has done very well, so that's exception. And then, of course, solar energy as well.
Right. Well, Michelle, amid all of this, on the Fed front, hearing Governor Waller, he is floating the idea of a July rate cut. How significant is that pivot to you, and how do you think markets are pricing in that dovish shift? And also, if you could tell us your base case for next week's decision.
Well, I know that Jerome Powell is going to be speaking, and a lot of eyes are on that. The rumors are flying all around. That he's planning to resign, although he's also come out and said that he has no intention of it. It's a little bit confusing. But one thing that seems pretty clear to me is that the spike that we saw in yields after Trump had threatened to fire Powell was sort of walked back, because the market does not want any kind of sudden change. We know what the market hates the most is uncertainty. So as far as that goes, I think the hint of some kind of a lowering of the rates at some point, whether it's July, some people are saying not till September, October, is important for the market to hear, and important for the administration to hear, because that's what they're really pushing for. So that's number one. Right now, the yields hovering right under, if we're looking at the short-term yields around 4.5. We go over that, I think that's trouble for the bonds. We break down under 4.4. I think that means that we're going to see more easing, number one. And number two is that I think right now we have a situation where that's going to be the surprise. Everybody's very heavily short in the bond market right now, anticipating the higher yields. But I have a feeling that we're going to see a big surprise whether they make a cut in July or not, just based on how this administration has transparently said what they want and then achieves it.
Mm. And just finally, a quick one. You described the U.S. as a thin economy right now. I mean, why would you, or what's prompting you to say that, and how should investors navigate that?
Well, when I mean thin economy, I don't mean our economy is thin. I mean that there is a new consumer that is emerging. We already have seen some of that happen over the last couple of years. I think it's in infancy, and that's people taking diet drugs to be thin or thinner. I also call it the vanity trade, so I apologize if there was confusion there. But I think this is such a huge area for investors to be looking at right now, not just diet drugs themselves, but also anything that's going to be impacted positively as a result of what they're saying could be 6% of the gross domestic product of people coming in now for the first time, thinner, feeling good. Are they going to buy beauty products? Are they going to go to the gym more? Are they going to buy exercise equipment? Are they going to date more? Are they going to take more supplements? Are they going to eat less junk food, drink less alcohol? This is a trend that I cannot say enough is going to really become even bigger and bigger as these diet drugs become more and more mainstream and more affordable.
All right, Michelle, it's good to have you on. Michelle Schneider there. She is Chief Strategist at MarketGauge.